channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. So please be careful. Don't get yourself scammed. If you want to follow me when I'm not on the airwaves of YouTube, get down in the description box. Click on that Richard Fain Millionaire Mentor Instagram link and give your boy a follow. And then send me a DM to let me know that you're rocking with me. I certainly would appreciate that, guys. I would appreciate it a lot, trying to get this brand new Instagram page up so it's, presentable. I'm trying to get it presentable. I'm trying to get the followers up. I'm trying to catch my old Instagram page. So if you guys can do me a big favor, help me out there. Get down to the description box, click on the Richard Fain Millionaire Mentor Instagram link, and give me a follow on Instagram. I really, guys, would appreciate your help in helping me get the new Instagram page up a bit. So if you want to do that, do that. And then, like I said, send me a DM to let me know that you're rocking with me. I would appreciate that so much. I want to say happy Labor Day to the folks that celebrate Labor Day. Of course, if you live here in the United States, you probably do celebrate, or at least you know about it. So today is a national holiday here in America. The stock market is closed. So we're going to cover some other topics today since the stock market is closed, and we'll get back on the stock market on Tuesday, September 3rd. But today we're going to talk about some other things that are brewing that could affect the stock market, could affect crypto, could affect the economy. So we want to talk about the US dollar and what's could be happening with the US dollar and how that will affect assets. That's going to be our main topic. And then we're going to dive into a little bit about where are people keeping their money right now? Is it in the stock market? Is it in money markets? We're going to talk about that. And then we're going to also talk a little bit about Fed rate cuts and why those Fed rate cuts could be a stock market rally catalyst. We're going to talk about that too. And then we'll end the conversation with the 900-pound gorilla. Silverback, that is. Y'all know I can't never stray too far away from Nvidia. But we're going to save that to the tail end of our time together today. So we got about 4 topics we want to cover. So we're going to get to those in a second. Couple things I got to do for the business, right? I do own a business, and I do have to promote my own business. Nobody else going to promote it, so I got to promote it myself. So let me dive into that. www.richardfain.net. That is my website, right? Been up a little over 4.5 months. Over 350,000 of you guys have already checked out the new website. So thank you. I appreciate y'all's patronage, or at least stopping by to check it out, right? Thank you. I appreciate that, because that's all organic, guys. I don't advertise on Facebook or TikTok or, YouTube or any place else. I just talk about it on my live streams every day. And 350,000 of you guys have been kind enough to go check it out. So thank you. Over 1,000 of you guys have purchased digital products. So a double thank you to you folks that understand the concept of investing in yourself. I tell you guys often, the most important investment you'll ever make in your life is in yourself. That was the most important investment I ever made for me. It was in me, in myself, getting me to, and I bought a book when I was 26 years old. Most important investment I've ever made in my life, more than the stock market, more than real estate, more than business. The most important investment I ever made in myself, I bought a little book called Rich Dad, Poor Dad by Robert Kiyosaki. 26 years old, back against the wall, had no idea how I was going to make it because I didn't have no job. I had no skill set. My skill set that I thought would retire me didn't work out. That was playing football. That was my skill set, but it didn't work out. So I found myself at 26 years old, no skill set, no money, no net worth. And guess what? Picked up a book, Rich Dad, Poor Dad, changed my life. So I keep telling y'all guys, information, if you use it properly, will change your financial life. But for those of y'all that don't want to make an investment in yourself, sorry, it's going to be tough on you. You better figure out how to make investment in you. Hey, you ain't got to use my website. Go find another website, but make an investment in yourself. That's the difference. What do you think the 1% did and do? See, the 1% are so successful because they decided a long time ago to make an investment in themselves. And that investment has turned into they control 99% of the wealth in this country. 99% of the folks that don't make an investment in themselves control 1% of the wealth. You ain't got to be a rocket scientist to figure it out. So you better go invest in yourself through some type of education, something. You better figure out something, or you're going to be broke for the rest of your life. You're going to be working for somebody for the rest of your life. So check out the website. For some of you folks, you'll do that. You'll take a look at the digital products, everything from investing in real estate with little to no money down, right? Becoming a real estate investor, to credit repair, to how to invest in the stock market, to mindset, millionaire mindset, how to be a better money manager. Oh, we got everything. How to start an online business, how to scale your existing business. All that stuff is there, but you got to make an investment in yourself. Next thing I want to ask you guys to consider is joining the Wealth Builders. Over 1,000 Wealth Builders, and we're growing every day. Why? Because we help people. See, my channel is all about helping people. There's very little upsell on my channel. Very little. Could I do more? A ton more. Guys, I got people contacting me every day to get access to y'all. And all I got to do is just turn you over to them, and they will pay me hundreds of thousands of dollars a year just to turn y'all over to them. But I won't do that. Because see, what I'm doing here is bigger than money. See, I got to answer to the Creator. When I leave this artificial place we live on and I got to go to the Creator, I got to answer to a higher power. And my salvation is worth more to me than money. I know how to make money. Listen, I don't need all the money in the world. So people come into me with money schemes to get access to y'all. I just turn them down because I already know how to make money. The money that I make right now is good enough to take care of me and my family. I don't want for nothing. I don't need to get greedy and sell y'all out to these wolves in sheep clothing. But I could, but I don't. Why? Because my channel is not about that. My channel is about helping people. So if you want help, get yourself over to the private mentorship club. There ain't no upsell. There ain't nobody over there trying to sell you nothing. We're not trying to get you to buy courses. We're not trying to get you to do all this other stuff that people get you to when they get you in their little Discord. We're not trying to do that. All we want to help you do is get to your wealth and wrap yourself around 1,000 people plus going in the same direction you going in. So if that's something that you want to join, the fastest growing financial community on Patreon, get yourself over to the website, www.richardfain.net. Second link down in the description box. Click on that website link, get to the website, check the digital products out, and then get yourself over to the Wealth Builders. Join the Wealth Builders and join the fastest growing financial community on Patreon. And guys, I'm in there every day. I make posts every day. I'm in the community chat every day, all day. I watch everything that goes on in the community chat. Ain't nothing being said in that community chat that I don't know. Right? But I allow folks to make their opinion as long as it's not against what I believe in, because I'm the creator of the community. So as long as it's traditional investing, buy and hold, big boy blue chip, long term, I'm okay with that. I'm okay with people giving their opinion as long as they're not trying to tell people what to do, as long as they're not trying to be some expert, because there ain't no experts. Because if you were an expert, you wouldn't be over there. You'd be on a yacht somewhere cruising the Caribbean. We're over there because we want to help people and we want help, right? So if you want somebody and 1,000 people to help you when it comes to your financial freedom, get yourself over to the private mentorship club. All right, let's move on. Moomoo, my self-directed brokerage app that I'm gonna be using over the next 10 years to 10x my net worth. First link down in the description box. Brand new offer, which is up to 15 free stocks. We had the 20 free stocks the last month and a half. That has gone. I told y'all it was a limited time offer. Poof, gone. New offer from the good folks at Moomoo is 15 free stocks, up to 15 free stocks. 5 free stocks when you put $100 in the account. An additional 10 free stocks when you put $1,000 in the account. So 15 free stocks if you put $1,000 in the account, 5 free stocks if you put $100 in the account. Now you got a good self-directed, world-class self-directed brokerage app where you can go ahead and start buying some paper assets, right? That's the key. Number one tool to build wealth, what is that? What is the number one tool to build wealth for you folks that been around and been rocking with me? What's the number one tool to build wealth? Income. I don't care how much knowledge you got. I don't care how much you believe in yourself. That's all great. We need those things too, but that's not your number one tool to build wealth. Listen to me carefully, guys. Your number one tool to build wealth is your income. Your ability to get yourself out in the free market and generate income. Number two tool to build wealth. What's that? What you do with that income. Those are the two, 1 and 2. Number one, number two tool to build wealth. Number one is your income and your ability to go to the free market and add value. And when you add value to the free market, what does the free market do for you? They pay you. You add no value, you get no pay. That's the way it works in this country and around the world. Now, when you get that pay, it's what you do with it. Am I going to take it and be short-term and instant gratification and make the 1% wealthy, or am I going to be long-term, delayed gratification and make me wealthy? Those are your two choices. You can be short-term, instant gratification, and you're going to make the 1% wealthy, or you can be long-term, delayed gratification and make yourself wealthy. That's it, guys. Number one and number two tool to build wealth. What are you going to do with that? Well, I hope you do something with it. First thing, get down in the description box and click on the Moomoo link. Get you up to 15 free stocks. Put you some money in there. Send me an email through my website, www.richardfain.net, and let me know you've opened the Moomoo account, and we'll go ahead and send you out some tutorial videos to help you learn how to use the Moomoo brokerage app. So now you're in position to start doing what? Taking that income and doing what with it? Investing it in assets that will multiply it for you while you sleep. That's what you want to do. Well, all right, guys, let's dive into this first topic, which is the US dollar. Now, if you've been following my channel, y'all know all year long, I've been talking about the US dollar, right? A lot in the beginning of the year. Probably first 3 months of the year, I was really talking a lot about the US dollar because there was a concentrated effort to try to devalue the US dollar. Why do other countries want to devalue the US dollar? Because they know if they devalue the US dollar, they got us. Nobody wants a military war with us. Nobody wants that. What they want to do is cripple our financial system. They want to deteriorate our financial system because that's where a lot of our power is. See, our power is in the US dollar. Why? Because the US dollar currently right now 90% of the world's transactions settle in the US dollar. That's powerful. Why is that? Why do 90% of the transactions in the world settle in the US dollar? Because it's stable. It's the United States. They can trust us. They know our dollar is going to be our dollar. They don't know what their currency going to do. Their currency fluctuating so volatile, you just never know. These countries transacting business with each other, they can't trust each other's economy. They can't trust each other's currency, but they can the US dollar. That's why it's the world's reserve currency. A lot of countries don't like that, who want to take us out. You got the BRICS nations. They want to take us out. They want to take us out through devaluing the US dollar, basically crumbling it, collapsing it, and coming up with their own currency. And they want the world to use their currency, not our currency. So there are concentrated efforts around the world to devalue the US dollar. And if the US dollar gets devalued, guess who else gets devalued? Us. Because our our assets are based in the US dollar. If you own real estate in the United States, if you own stocks from American companies, if you own ETFs in America, index funds, mutual funds, you name it. If it's in America and the US dollar collapse, your assets are going to collapse. And that's where they want to really get us. But we're going to survive. But here's the headline. Oh, by the way, the BRICS, the original 5 BRICS nations, that would be Brazil, Russia, India, China, and I believe South Africa, if I'm not mistaken. Those are your original 5 BRICS nations. Now they're expanding, bringing on more folks to try to do what? Beat us. Why? Because we got the #1 economy in the world. We got the #1 financial system in the world. We have the #1 companies in the world. Oh, how do you know that, Richard? Well, go look at the companies with the most value attached to them from a market cap standpoint. Where do they come from? United States. Yeah, 6 out of the top 7 come from the United States. There ain't but one country that has a company that's in the top 7 most valuable companies in the world, and that's in Saudi Arabia. That's it. That's the oil company in Saudi Arabia. I don't know if it's the oil company owned by the royal family. And I don't know. It's one of them companies in Saudi Arabia, but it's an oil company. It's the only one in the top 7. The other 6, guess where they come from? Good old US of A, baby. And other countries don't like that. They know they can't attack us militarily because that's a no-win situation, because we're going to nuke them we're going to blow up the whole world. They know that. So they're not going to mess with us with no nukes, because they know better. So what do? They try to attack us through our financial system. And the dollar is where they start. So here we go. Just my little 2 cents now. Y'all know I ain't no expert here. I'm just a guy on YouTube. Go out and do your own research, right? Go out and do your own research, come up with your own conclusion. But my conclusion, my research leads me to this. Strap in. This is the headline. Strap in. Fed suddenly braced for a US dollar crisis that's predicted to spark total collapse and a critical Bitcoin price dipping point. Right? So, people want to, Bitcoin's going to be the new world's currency. Bitcoin's going to be the way to pay for stuff. Bitcoin is going to do this. Bitcoin is going to do that. Bitcoin ain't done nothing but pump and dump. That's it. It ain't changed nothing since 2009. We've been saying since 2009, Bitcoin is going to be the new currency of the world. It's going to be this. It's going to be that. It ain't been nothing but a pump and dump. That's all Bitcoin has been. It ain't been nothing else. Nobody transacts business in Bitcoin. Not on a national, world, global scale. Yeah, if you want to go buy a Lamborghini and want to look cool, yeah, Lamborghini will take your Bitcoin and send you a Lamborghini, but you can't go get a loaf of bread with it. Can't go get no milk. Can't go to your grocery store and pay with Bitcoin. No, you can't. So guess what? It don't matter when it comes to replacing the dollar. Come on, guys, really? No. Can you pump and dump? and you know what you're doing and make money in Bitcoin? Absolutely. But it's only worth what someone else will be willing to pay. There's no underlying value. So this whole notion of Bitcoin and cryptocurrency going to take over the dollar and be the world, guys, that's a pipe dream. That ain't happening no time soon. Definitely not in our lifetime. Now, what happened 300 years from now, I don't know. But in my lifetime, it ain't happening. It's not replacing the US dollar. Right now, it's just a pump and dump. That's all it is, right? So here we go. Bitcoin and crypto prices have surged this year as the US dollar index falls to year-to-date lows. Okay? The Bitcoin price is traded around 60,000 per coin, up from January lows of under 40,000 as traders bet a fresh injection of liquidity by the Federal Reserve will put the Bitcoin and crypto market on a cusp of a major move. What do they mean by a fresh injection of liquidity from the Federal Reserve? They mean interest rates, guys. I keep telling y'all, interest rates, when you lower them, it introduces a new money supply to the economy. Anytime interest rates are lower, it introduces a new money supply to our economy. Anytime you reduce rates. So the Fed getting ready to start this cycle of reducing rates over the next 2 years. They're gonna reduce these rates. And that's gonna create a new money supply into our economy. And then a lot of folks think that money supply that's coming in through lower interest rates will fuel Bitcoin. Listen, man, if that's what y'all want to do with y'all money, go right ahead. But please know what you're doing, though. Because this Bitcoin thing ain't nothing to mess with, man. It's controlled by whales. Just like the stock market is controlled right now by Wall Street traders, Bitcoin ain't no different, guys. It's controlled by whales. These people manipulate the price of Bitcoin when they want to. Keep telling y'all this. Okay, let's keep moving. Now, as China gears up to drop a Bitcoin price bombshell, fears are swirling. The US dollar is on the verge of total collapse. Here we go with China again. Again, they're part of the BRICS nation. Here we go with China again. One thing y'all gotta understand, guys, US and China are tied at the hip, guys. So anytime I hear anything about China getting ready to do this or do that against the US, I know it's propaganda. These guys are tied at the hip. Who do you think the #1 trading partner with the United States is? China. Who do you think the #1 trading partner with China is? The US. We're tied at the hip. We got the #1 economy in the world. They got the #2 economy in the world. We're tied at the hip, guys. Come on. It's all propaganda. Now, as China gears up to drop a Bitcoin price bombshell, I wonder what that is. When they've already outlawed Bitcoin in their country, pretty much. Bitcoin is pretty much outlawed in China. I don't know. Here we go. Now, as China gears up to drop a Bitcoin price bombshell, fears are swirling that the US dollar is on the verge of total collapse, setting up the Bitcoin price for a critical tipping point. We still in the pump stage on Bitcoin, right? We ain't quite gotten to the dump stage yet, but it's coming. We're still on the pump stage. We're still pumping this thing, and people are still buying it as it pumps up. And then all of a sudden the dump coming. Here we go. The US dollar index just hit a new 2024 low. Actually, still relatively high, but it looks like it's on the verge of total collapse. Economist and gold bull Peter Schiff posted to X. This is Peter Schiff now. He's the gold standard. He knows everything, right? But don't get me wrong, he's rich. But he also knows how to pump. He knows how to pump. He knows how to pump. And what's the best way to pump? Saying that the US dollar is getting ready to collapse. That's the best way to pump Bitcoin, right? Because guess what? What you want people to do is flee to Bitcoin, not the US dollar. You want them to flee out of the US dollar to Bitcoin. So what do you do if you're Peter Schiff and you're what do they call him? What do they call him? He's an economist and gold bull, Peter Schiff. So gold and Bitcoin, they tie them two together, right? The index could easily sink below 90 before year end, challenging the 2020 low. Schiff, the founder of Money Manager, Euro Pacific Asset Management, and a Bitcoin and crypto skeptic, later added, I think that low will be breached in 2025. So this guy here, he's a gold guy, right? Again, just like Bitcoin, in order for gold to go up substantially, in order for Bitcoin to go up substantially, you want people to be afraid that the US dollar is going to collapse, because both of those asset classes benefit from the dollar going down. Both of them do. Gold and Bitcoin, right? Why? Because it's an alternative way to transact business, right? So this Peter Schiff guy is a gold guy, a gold bull. So he's saying, okay, US dollar is going to collapse. I think that low will be breached in 2025, triggering a US dollar crisis, crashing the economy and sending consumer prices and long-term interest rates soaring. This is what Peter Schiff is saying. Of course, he'd love for you to come into gold. He'd love for you to buy gold. Get yourself prepared for this crash. Go get you some gold. Get ready for the crash. I don't know how long you've been saying that, but okay. Last month, Fed Chair Jerome Powell's speech during the annual economic symposium of central bankers at Jackson Hole, Wyoming, struck a dovish tone and queued up a September interest rate cut, driving down the US dollar. So here's the thing, guys. When interest rates are higher, the US dollar is worth more. When interest rates are lower, the US dollar is worth less, right? So why is that important to the global economy? Because it's more expensive for them to settle in the US dollar when interest rates are higher. It's more expensive for other countries to settle their transactions in the US dollar when interest rates are higher. It costs them more. It costs them more to settle. So when interest rates are down, it's a little bit less expensive for them to settle in the US dollar, right? Again, I'm no expert here. I'm giving you my little 2 cents. You go out and do your own homework, come up with your own conclusion if you want to. That's fine with me. I'm just giving you my little 2 cents. It's an opinion. That's all it is. I'm just giving you my opinion. I could be 100% wrong. Who knows? I'm just a guy on YouTube. So here we go. It's been a tough summer for the greenback. Neil somebody, analyst at investment platform Stockalytics, said in an emailed comment, as recently as April, dollar dominance looked unstoppable as its price soared versus almost all global currencies. It's because interest rates are up, and they still are up. Now it's at 2024 lows against the euro, the pound, and the yen. The Federal Open Market Committee, FOMC, July meeting minutes had earlier revealed policymakers are moving dovish than previously thought, suggesting interest rates could come down sharply after skyrocketing to 23-year highs at a historical pace through the Biden administration as inflation spiraled to highs not seen since the 1980s. You know, they had to throw Biden in there, this election cycle. So you got to throw Biden in there to make it his fault. Throw him in there. Throw him in there. The Fed is now widely expected to kick off a rate-cutting cycle at its two-day monetary policy meeting that begins on September 17th. There's now speculation interest rates might come faster than initially indicated or predicted. Now they're saying they're going to come down faster. Let's read on. As many as 100 basis points could be knocked off current rates by the end of the year. This will cool dollar expectations for the rest of 2024. But it's worth keeping a close eye on how other central bankers react. That all-important rate gap, the difference in the interest rates between countries, could be the driver of significant currency volatility over the coming months. Strap in for what could be a bumpy ride. Again, interest rates affect other countries closing in the US dollar. They do, right? Higher interest rates are typically the dollar is more valuable. The lower interest rates are typically the less valuable the dollar is, right? Who benefits from a less value dollar? Gold, Bitcoin, right? Those are two big winners. Yep. Those are the two big winners. In my opinion, y'all might disagree, but in my opinion, those are the two big winners. Dollar devalued, guess what? Bitcoin, gold. They get a little bit of a bump, right? And then all of a sudden, you're going to get the bulls for crypto, the bulls for gold. They're going to get on TV, national TV, and propagandize y'all, right? They're going to propagandize you and get you to do the opposite of what they're doing. That's the whole game. That's how they use the 99%. They get on TV, they get online, they propagandize y'all, and they get y'all to do the opposite of what they're doing. That's what they do. This is my opinion. In Europe, the EU's European Central Bank and the UK's Bank of England are both expected to further cut rates after beginning loosening cycles in recent months, while questions remain over the Bank of Japan after it caused a global meltdown when it surprised traders with an interest rate hike instead of a cut. They're saying that's what caused Black Monday. I don't believe that, but y'all believe whatever you want to believe. I don't believe any of that. I don't believe any of this. I don't believe any of this. The 1% control all this stuff. I don't believe any of this. I don't believe any of it. But it's worth reading and talking about. Y'all know my position. I think the 1% control all of this, and they can pull strings and manipulate what they want to manipulate to make more money. That's what I believe. You guys can believe whatever you want to believe. Here we go. Meanwhile, the Bitcoin price has lost the momentum it built up through the first half of 2024. Casting doubt over its performance through the rest of the year. While we remain optimistic about digital assets, mid to long-term prospects, the current evidence calls for caution. This is coming from the chief executive of 10X Research, wrote in an email note. Although the market experienced near V-shaped rebounds following dips in early May, early July, early August, the underlying market structure and fundamentals have aggressively weakened. As a result, each dip has become deeper, and the subsequent recoveries have been more subdued. The latest end-of-month data indicates we may be nearing a critical tipping point in September, marked by a decline in demand. Again, man, I don't care what they do. Decline, up, decline, it doesn't matter. If I'm in the market 365 days a year, I'm dollar cost averaging in, I'm a win. As long as I'm long. I just got to be long. I'm a win. I don't care what the dollar does, up and down, sideways. The dollar ain't going nowhere. Why? We're the United States. We're the 900-pound silverback gorilla, period. Best economy in the world, best financial markets in the world, best companies in the world, period. Period. The dollar ain't going nowhere. They've been saying this. Still 90% of the transactions globally settle in the US dollar. We ain't going nowhere. I'm gonna continue to keep my money in the US dollar. I'm gonna continue to buy assets in the United States. Period. You gotta knock us off the mountain, baby. And right now, you ain't gonna knock us off right now. I don't know what's gonna happen 100 years from now, but for right now, we ain't getting knocked off. So I'm good. I'm not gonna worry about the US dollar. You guys can worry about it if you want to. You can move your money to gold. You can move your money to Bitcoin or whatever you want to move it to. I'm going to keep my money in assets. Boom. I'm going to keep my money in assets. And that's it. I'm going to keep my money in assets. I'm going to keep it there like I've kept it there for 30 years. 30 years. And I'm doing great. So, I don't know. Y'all do what y'all got to do, but I thought I wanted to give you just a little bit of insight to how we're starting to get this ramp up in attacking the US dollar again. And I think it's all in an effort to do what? Drive up the price of gold and drive up the price of Bitcoin. That's all it is, in my opinion. Y'all might disagree, but my opinion is you got Bitcoin bulls, what I call whales, manipulating, and then you got gold bulls or gold whales, like Peter Schiff, manipulating. That's all it is. Ain't nobody finna go to Bitcoin to do no large No. Yeah, if you want to buy a Lambo and get a little popular on social media, I bought my Lambo with Bitcoin, but you can't go buy bread. Listen, man, until I can go to the grocery store and buy my bread with gold and buy my bread with Bitcoin, I'm not moving. When the day comes, I can walk in my grocery store and I can give them a brick of gold and they gonna give me some groceries. Perfect. The day I can walk in and say, oh, here's my phone. Take my Bitcoin wallet, get your money out of my Bitcoin account. Then I will switch from the dollar. But until then, I ain't moving. I'm going to use the dollar. You use what you want to use. But until I can go get me a loaf of bread and some eggs from my local grocery store, I ain't switching. Nope. I'm not switching. All right, let's move on to our next story. Move on. Let's take a look at this one right here. Let's see what we'll go to this one. Here's the headline. Second story, here's the headline. The stock market rally ahead of rate cuts is a once-in-a-lifetime event. Let's see. What are these guys talking about? Let's see. Is it propaganda or is it real? Is it fake news or is it real news? Let's take a look. Let's see if this is fake news or real news. It began badly. 4 weeks ago, it began badly, but 4 weeks on from the worst volatility blow up since the pandemic. They're just talking about August 5th, Black Monday. August will go down as another grand gesture of confidence by Wall Street in its ability to suss out the future. I don't know what that means. Suss. I don't know what that word means, but I don't know. I have no idea. Levels of conviction are soaring across assets. In one example, exchange traded funds, ETFs, tracking government debt, corporate credit, and equities have now risen in unison for 4 straight months. It's the longest stretch of correlated gains since at least 2007. ETFs tracking government debt, corporate credit, and equities. They're saying have risen in unison for 4 straight months. Remember, ETFs do what? They track an index or they track a sector, guys. Right? That's what they're telling you. These ETFs are tracking government debt, corporate credit, and equities have now risen in unison for 4 straight months. The longest stretch of correlated gains since at least 2007, up 25%. Now, a couple days ago, I told you the S&P was up about 20%, 19 and some change, right? So that's not far-fetched for me to think corporate debt, right? ETFs tracking corporate debt, ETFs that are tracking corporate credit, and ETFs that are tracking equities are up. S&P, which is the broader stock market, is up almost 20% year to date. So, yeah, I can rock with that. I can rock with that. Up 25% in the past 12 months. The S&P 500 has never climbed this much in the run up to first rate cuts on an easing cycle. 7 decades of data compiled by research and Bloomberg show. So the S&P is moving up at a pace faster than they've seen in decades as it relates to first interest rate cuts. So what do you think that means? Well, for me, just a regular guy here, not that I have an IQ, but I think they're saying, listen, if the S&P is already moving at the pace it's moving leading up to rate cuts, what is the possibility that it will continue going higher after rate cuts? That's the way I read it. You may read it different, but that's the way I read it. But good news for me. Here's the good news for me. I've been in the S&P all along, all year, DCA like a mofo. So I'm good. I told you 6 months ago, get yourself a broad-based stock market ETF that tracks the S&P. Told you that 6, 7 months ago, 8 months ago. Some of y'all listen, some of you don't. That's all I'm saying. It's not rocket science. It's just follow the blueprint. It's not rocket science. It's just follow the blueprint, right? Traders are leaning into bets with zeal, even as serious questions linger about the economy and inflation and how central bankers will respond. Before the Federal Reserve has even begun to act, bond markets have priced in a slew of rate cuts. This is what the bond market is priced in, guys. A slew of rate cuts. Measures of default risk are falling and surging equities reflect sure thing bets the economy will boom. Interest rates go down, assets go up. That's what they mean by the economy is getting ready to boom. Now, whether that's true or not, guys, I don't know. I don't got a crystal ball. I'm just telling you what these folks here are saying. But it makes sense to me because I've been doing this for 30 years. The lower interest rates go, the more money supply comes into the economy, the more people are able to borrow money cheap, the more companies are able to borrow money cheap, and they take that cheap money, and a lot of them buy assets. AKA, demand goes up for assets. And when demand goes up for assets, what happens to asset prices? They go up too. So you ain't got to be a rocket scientist to figure this out, right? Rates come down, new money supply comes into the economy, new money supply that comes into that economy gets done what with? Some people take that money supply and go spend money to make other people rich. So that money goes into companies, right? That makes companies more profitable. Some people, like yours truly, take that cheap money and I go buy assets. Either way, it's a win-win for me. Why? Because if you want to take your cheap money and go buy you a new Toyota Corolla, go right ahead. That's just money going into a company that's part of our economy. And if our economy booms, a guy like me gonna make money because I'm invested in companies. I'm invested in companies 365 days a year. So either way, when rates come down, I'm going to benefit because I'm invested in companies. Half of us, I ain't gonna say half of us, 70% of us, gonna take that money and buy stuff we don't need, which is gonna stimulate the economy. It's gonna give companies more revenue. Hopefully, that equates to more profitability. And that equates to what? Increase in stock price. I benefit from that, right? I also benefit from what? Lower interest rates. I can go buy real estate now and make money again. I can go buy real estate with a low interest rate on a 30-year fixed, put me a 10 in it, give me a 10% cash on cash return. I borrowed the money for 4 or 5%, net, put 5% in my pocket. Plus I get the appreciation on the property of 3 to 4% every year. I mean, that's a 14, 15% return on your money, man, when rates come down. So when rates come down, guys, assets go up. So position yourself, get yourself in position to take advantage of some of this stuff, right? Put yourself in position. Okay, so we talked about traders and they're leaning into bets that boom, economy gonna boom. Gains of 2.3% for the S&P in August. Even despite the fact we had Black Monday, S&P still inked out 2.3% gain in August. 1.8% for an ETF tracking long-dated treasuries and 1.5% for investment-grade bonds all amount to a big show of force by cross-asset bulls who are convinced Fed Chair Jerome Powell will cut rates into a healthy economy. All told, the wagers are at the mercy of how economic data plays out on the cusp of the central bank's meeting September 18th. Everything has to go right, said the head of multi-sector investing at Goldman Sachs Asset Management. We need to continue to have trend or above trend economic growth. We need to have a labor market that's not too hot, not too cold. And that then would allow for the consumer to continue to consume. Those things all have to be in a perfect balance. They call that a soft landing. That's what they call that, guys. They call it a soft landing, and we are headed there. Will we get there? I don't know. I'm not an expert here. I'm just a guy who invests his money in big boy blue chip assets 365 days a year and let it go where it go. And over 30 years, as long as I'm long, I win. See, I don't worry myself about the US dollar. I don't worry myself about inflation. I don't worry myself about interest rates. I don't. I already know what the 1% know. It don't matter because they control all of that. So all I got to do is buy a big boy blue chip and stay long. And the 1% will allow me to make money. Now, if I want to try to be the expert and try to beat the 1% and, oh, okay, I know what they're doing, you're not going to win very many battles, man. The key is understand what these people are doing and what they control. They control it all. Listen, man, you saw what happened to Nvidia, man. If that don't tell you who control what go on in this country, you may not be on this country. You may be in a different country somewhere. Maybe your body is here, but your mind and everything is up on Pluto somewhere. Because if you don't think the 1% control everything that go on in this country, just go look at what just happened. Just look at what's happened a week ago. I mean, not even a week ago. Come on, man. Y'all know who control all of this stuff, right? That's why I keep telling y'all, you got to be prepared. You got to be in this thing 365 days a year through DCA. So you can take advantage of whatever happens. Hey, if it's dip season, great. I'm buying these assets at a deep discount. If it's bounce season or rally season, great. Everything that I bought at the dip is going higher. See what I'm saying? That's why you got to be in this thing 365, in my opinion. Now, again, I'm not an expert. I'm not a financial advisor. I can't tell you what to do. All I can tell you is what my experience has been over 30 years doing this. And my experience has been, I don't worry about any of this stuff. I just stay in the market 365 days a year. When it's dip season, I double down. Anytime there's dip season, I double down. That's it. And I just be patient and wait. I wait and I wait and I wait until the 1% is ready to take this thing to the moon again, which they do. They pull it back, but they also rubber band it back. And that's when I keep making wealth. Stock market started at 0 one time. S&P 500 started at 0 points at one time in its whole history. It ain't been 0 again, guys. That's for a reason. You do know that, right? You do know last year it's higher this year than it was last year. You do know it's higher now than it was 6 months ago. That doesn't mean it can't bring itself all the way back down to lows. It can, but it ain't gonna go to zero. It hasn't in 140 years. So for a guy like me, that's what I hang my hat on, right? You got to figure out what you hang your hat on, but that's what I hang my hat on, right? So while markets have righted themselves, this is what they're calling it. They're saying while markets have righted themselves, the travails of early August demonstrate the delicacy of the present consensus. With a single government report, U.S. hiring data for July fueled convulsions that briefly sent Wall Street's fear gauge, the VIX, above 65. August employment update is just 7 days away. Not 7 days anymore, guys. It's Friday. What is Friday? August what? 6? Not August 6, but September 6? Boom. You get a new report on August 6. Why do I keep saying August? September 6. New labor or jobs report comes out on September 6. Will we have a repeat of August 5th? A brand new Black Monday? I don't know. We'll see. Either way, I'm in the market 365 days a year. I'm going to take advantage of whether it goes down or goes up. I'm going to take advantage of it. And I've been telling you all that. That's my strategy for success. It's not because I'm a smart guy. It's just because I know the 1% says, listen, Richard, we're going to manipulate this thing 360 degrees. You don't even worry about it. You're not going to be able to follow us. You're not going to be able to reconcile it. You're not going to be able to understand it because you're not part of the 1%. You don't have a 200 IQ. So you're not going to understand it. But what we will tell you, Richard, is this. If you just stay in this thing for 365 and just do that year in and year out, you'll get rich. That's what they tell me. This is what I do. I just stay in it. Because I understand the 1% make their money in the stock market or they hold their money in the stock market. The 1% make their money in real estate or they hold their money in real estate. The 1% make their money in companies or they hold their money in companies. That's what they do, guys. You do understand that, right? You up here trying to understand the rationale behind something is not going to help you. What you got to understand is actually who controls what goes on in this country and the world. And then just get in their hip pocket. That's what I do. I just get in their hip pocket. And I keep it pushing. So here we go. August employment update is just a few days away, with economists forecasting, compiled by Bloomberg, putting payroll additions anywhere from 100,000 to 208,000. Wow, that's a wide range. There's no way you can miss that. It's so wide. I mean, you got to get it right somewhere in there. Goodness gracious. 100,000 added to 208,000 added. That's a big old wide range. You probably won't miss Bloomberg. Data on U.S. manufacturing, durable goods orders, and initial jobless claims are also due next week. That's this week. Well, maybe that is next week. Yeah, maybe that is next week. Let's just go with what they said. Due next week. Due next week. Each with the potential to influence sentiment at a time when growth has become a singular obsession of markets. And that's true. That's what happens. Wall Street traders, when they control the stock market, this is what happens. Because that's who's controlling it right now. Wall Street traders. A lot of institutional investors are laying back. I'm going to talk to you a little bit what inflows have went into money markets here in the month of August, and you'll see what I'm talking about here in a sec. We're going to keep moving, though. The direction of travel is clear on future policy but that the timing and pace of rate cuts will depend on incoming data, evolving outlook, and the balance of risk. So anywhere between 100 to 150 basis point reductions is where we're at, guys, over the next 4 months. All of that will be driven by data. It will. Right? All of that will be driven by data, depending upon if it's 100 basis points, 75 basis points, 125 basis points, 150 basis points. It's all predicated on incoming data. All incoming data. Fed dovishness was instrumental in pulling Wall Street's investment complex through its summer tantrum. With a flash crash in early August, they call it a flash crash, quickly consigned to history. All 4 major assets, ETFs, tickers, SPY, TLT, LQD, HYG, rose at least 1% for the month, while more than $1 trillion was added to American equities alone. See, a lot of y'all thought August was terrible. A lot of y'all thought, oh, August was a nightmare. August was a nightmare. Oh, golly, I did this and I did that. I couldn't buy this, I couldn't buy that. But all in all, that was the smoke screen that a lot of y'all got tricked into and you stayed on the sideline, when August really turned out to be a really good month. But see, that's the propaganda that they puppet masters. The 1% got y'all, they're the puppet masters. They got y'all thinking one thing when actually it was the totally opposite. You should have been, in my opinion, I was in equities the whole month. I wasn't on the sideline. I ain't got no money. I got a little bit of money on the sideline right now. Everything else is in equities, which is a lot different from what I normally do. I normally keep 25% of my net worth in cash, but I've had to deploy a lot of that 25% because of, it was dip season. I had to go get it. See, it was dip season in August. And guess what August finished up and did? All 3 major indexes, what did they finish up? Higher. But oh golly, August was terrible. I just kept my money market account. Okay, go ahead. Keep it in there. What did these folks just say? Check this out. I'm going to read it again. August quickly consigned to history. All 4 major assets, ETFs, right? Tickers, SPY, TLT, LQD, HYG rose at least 1% for the month, while more than $1 trillion was added to American equities alone. But it was a terrible month. Traders are pouncing on everything from small caps to speculative debt, convinced that the world's largest economy will avoid a consumer-led downturn despite a weakening labor market. Traders. That's who's making money right now. But guess what? I'm not a trader. I'm just going to do what they do. Now, I'm not going in and out of it. I'm just going to go long. But they buying and selling, but I'm going to just buy. I'm not going to sell anything unless I got my shorts. Some of my shorts, I will do exactly what they're doing with the shorts. But the longs, I'm just going to hold them, guys. Because I know better times are coming. I know higher is coming at some point. I don't know when, but I believe it's coming at some point. So traders are pouncing on everything from small caps to speculative debt, convinced that the world's largest economy will avoid a consumer-led downturn despite a weakening labor market. Funds focused on U.S. stocks added $5.8 billion for the 9th straight week of inflows, and those specialized in high yield attracted $1.7 billion in inflows. This is coming from EPFR Global data compiled by Bank of America Corp. Wow. U.S. stocks added 5.8 billion for a ninth straight week of inflows. Okay, let's keep moving. Some of y'all got that, some of you didn't, but let's keep moving. For now, at least, nothing in economic data or corporate earnings is screaming danger. Yet, if there's a lesson in August route, it's that consensus bets going long artificial intelligence, exploiting the weakening yen, can backfire suddenly. True, but I'm still going to go long on artificial intelligence. I'm going long. I don't care what these guys say. I'm going to go long, right? I'm going to go long on artificial intelligence. I don't care what these guys say. For a sense of the tenuousness, consider the path of rate cuts priced in Fed fund futures back in January, when inflation fears ebbed. Bond traders wagered on roughly 6 rate reductions for all of 2024, with the first one as early as March, when inflation provided stickier than forecast. Those bets were paired, and by April, only one cut was expected. Now, the consensus is the Fed will kick off its easing cycle next month. Well, this month in September, with 4 quarter-point reductions by December, so 100 basis points. The reality is both the Fed's own guess in the dot plot and the market's expectations are always wrong, said Chief Investment Officer at Ocean Park Asset Management. I could see easily 3 cuts this year. 4 might sound pretty extreme. It would probably only happen if the economy was really in bad shape. At the same time, caution has mostly proved a costly investment philosophy this year in the credit market, the much dreaded maturity wall. Okay, enough of that rabbit hole. Here we go. We got rates coming. We don't know how much. We know they're going to cut in September. That'll be the first rate cut. My speculation, it'll be 25 basis points. I think we'll get through the election cycle, and I think they'll cut again in November, and then they'll cut for the last time in December. Now, no one knows what the election will do to the market, right? You can go look historically, right? You can go out and do your own homework and look at historically what the market has done during an election cycle. I don't know. Again, I don't care about any of that. See, maybe some of y'all do, but I don't. I don't care anything about the election cycle. I don't care anything about rate cuts. All I care about is being able to get into these big boy blue chips and go long. That's what I care about. Because history tells me if I can just do that, even when they're trading at a discount, which is even better, because I can buy them cheaper. And at some point, institutional investors really get back into the market in a big way. And when they do, that's when things go higher. Right now, Wall Street traders are controlling everything. Right? So you're going to have a lot of volatility when Wall Street traders are controlling the stock market. They are right now, because a lot of big boy blue chip institutional investors have moved their money to money markets. And here's the next one I want to walk you guys through. Here's the headline. 6.4 trillion piled into money market funds as Bank of America warns rate cut won't fuel rotation to stocks. 6.4 trillion, guys, have moved into money markets. That ain't you and me. That's not us. That would be institutional and huge companies, not you and us. We ain't got no savings. So we ain't rotated to nothing. We ain't moved nothing to nothing. It's just the big boys. So just please get that. Oh, golly, I got it right. I took my 25,000 and put it in the money market. I'm part of the 6.4 trillion. Kudos to you. If you are, great. But that 6.4 trillion, guys, is not retail investors. Let's just be honest. It's not. It's the 75% of big boy investors. That's where the 6.4 trillion is coming from. So let's read on. Let's read on. The amount of capital invested in money market funds has surged to a record level with a potential Fed rate cut coming this month. New figures from the Federal Reserve economic data show the amount of capital invested in money market funds has soared to over 6.44 trillion as of June of this year. Money market funds are financial instruments that allow people to invest in lower risk and short-term debt securities, including U.S. securities. Investors began flocking to the fund in 2022 when the Fed began to aggressively raise interest rates in an effort to stifle soaring inflation, significantly boosting the yield in short-term treasuries. That's why y'all saw the run-up, right? See, when Fed funds rate go up, you see short-term interest rates go up, right? For like money markets, CDs, U.S. treasuries, all that stuff goes up with interest rates, right? So you saw that over the last 2 years. Although Fed Chair Jerome Powell has signaled rate cuts are inbound, Bank of America analysts say they doubt it will have an immediate impact on the popularity of the funds. This is what Bank of America is saying. Rate cuts not a likely spark for equity buying from the 6.4 trillion money market sector. History shows the first rate cut precedes more cash inflows into a soft landing, and bonds the likely winner in a hard landing. So what they're telling you here is as the Fed gears up to reduce these rates, you will see more inflows coming into what? Money markets. And again, I don't believe that's the 25%, because history tells us the 25%, which are 99%ers, we don't really have that type of wealth. We don't. That's why we only control 1% of the wealth. So $6.4 trillion is a lot of money. That ain't us, right? It's the 1%ers who are moving that type of weight, and they're moving it around. See, I keep telling y'all, when you already have wealth, it's easier to go grab something at 4% and get you a nice little cash flow from it at 4%, and it's protected. But when you have no wealth and you're putting money in a money market account, you still ain't building no wealth, and you already don't got no wealth. So you moving your $25,000 or $50,000 to a money market account, that, in my opinion, long term, that's not building wealth. Now, if you move it there short term and say, well, okay, I'm gonna move it there for 3 months just to see what things do, and then boom, I'm gonna redeploy this thing again. Okay, nothing wrong with that, because you're there short term. But if the game plan is I'm gonna leave my $50,000 in my money market account for the next 30 years and I'm gonna retire a millionaire, you're gonna be sadly mistaken. You're not. Because as soon as them rates start coming down, eventually money market rates are gonna come down, because they're short-term instruments. You got short-term rates coming down, tied to short-term instruments, they come down too. You're not gonna have short-term instruments offering a 5% interest rate when short-term interest rates itself is at 3.5%. It don't work that way. Done. And at some point, this 6.4 trillion, or a good portion, will be coming back into the market. I don't know when. At some point it will, though. But it says rate cuts, not a likely spark for equity buying, basically stock market, from the 6.4 trillion money market fund sector. History shows the first rate cut precedes more cash inflows into a soft landing, and bonds the likely winner in a hard landing. In April, B of A strategists reportedly said historical data shows that cash funds tend to witness more inflows in participation and anticipation. My apologies, let me read that again. In April, B of A strategists reportedly said historical data shows that cash funds tend to witness more inflows in anticipation of the first rate cut before seeing outflows a year later. So basically what Bank of America is saying here is, if the first rate cut is going to be in September, you're going to see more big boys coming in to money markets. And then about a year from now, those big boys will probably start deploying outflows into something else. But keep in mind, guys, the big boys already have made a ton of money the first 6 to 8 months of the year. Why do you think the S&P is up? Why do you think the Nas is up? Why do you think the Dow is up? Why do you think Nvidia is up 150%? Why do you think other companies are up? I walked you through all the Mag 7 companies. All of them are up with the exception of Tesla. I walked you through FTEC. I walked you through SPLG, which is none but a reflection on the S&P 500 and the information technology sector. All of them are up, guys. So a lot of these big boys have already made money, and they're saying to themselves, let's flow in the money market for now. Let things cool down. Let the Wall Street traders do what they do, and then we'll come back in at some point in 25. That's my speculation. You guys come up with your own conclusion. But it sounds like a pretty good speculation to me. Now, we're going to end this thing with the 900-pound gorilla, and then we're going to wrap up. But before we get to the 900-pound gorilla, do me a big favor. If you're interested in getting 15 free stocks, go down to the description box and click on that first link. Moomoo is going to give you up to 15 free stocks when you open a new Moomoo brokerage account. When you put $100 in your new brokerage account, they're going to give you 5 free stocks. If you decide to put $1,000 in your new brokerage account, they're going to give you 15 free stocks. Hey guys, don't delay, act today. Get down in the description box and give Moomoo brokerage app a try. They're going to go ahead and give you up to 15 stocks when you do that. If you put you some money in there, ASAP Rocky. You got to put the money in there ASAP Rocky. You got to make the transfer. Now, for those of you folks who are saying, Richard, I'm more than willing to give it a shot. I just don't know how to use these apps. I'm brand new at this. Then guess what? I got your back. All you got to do is send me an email through my website, www.richardfain.net. Second link down in the description box. Send me an email. Richard, I opened the Moomoo account. I want to give this thing a try, but I need to learn how to use the app. I'm going to send you 2 videos, tutorial videos done by the good folks at Moomoo. I'm going to send those out to you ASAP Rocky. ASAP Rocky, they coming out to you. And then all you got to do is spend some time, go through the videos, learn the basics that you need to learn in order to use the app, and then boom, you're ready to go. You're ready to get yourself in position. You're ready to start taking advantage of what I believe is still the greatest wealth transfer in the last 100 years. That's going to be happening throughout 24, 25, all the way to 2034 over the next 10 years. Greatest wealth transfer, and people who have a desire to transfer wealth to themselves will have the opportunity to do that. They will have the opportunity to do that. But you got to get yourself in position, and you gotta act, guys. You got to act. You have to act. Now, I'm not a financial advisor, and I can't tell you what to do. What I can tell you is this is an opportunity for you to try out a world-class brokerage app. In my opinion, that's all my opinion. Your opinion may differ. But my opinion is it's a world-class brokerage app that I've been using since January 2024. So check it out. All right, let's dive on into this thing. Here we go, 900-pound gorilla, give you an update. Market opens tomorrow. We'll see what else happens. But for now, let's give you a little update as of September 2nd, 2024, 7:05 a.m. Eastern time. Here's a little update. Here's a little update. Nvidia CEO Jensen Huang surprised by skeptics. Guy's blown away. He is blown away of what's been happening since Q2 numbers come out. Let's take a look at what he says. Nvidia's co-founder and chief, no stranger to skeptics, was surprised to hear doubts after his company's latest earnings report. But first, Three things you need to know well, we ain't going in that. Here we go. Stratospheric expectations. This is what we're going to get into. Nvidia Corp Chief Executive Officer Jensen Huang is never lost for words. He's one of the great explainers and pitchmen in tech, and that skill has played a role in making his company one of the biggest in the world. Fresh off an earnings conference call where his persuasion skills had failed to halt a 7% slide in his company's stock. Here's the thing, guys. They were going to slide that stock regardless what the CEO said. That guy could have came out and said, you know something, guys, we're going to do 500% of revenue quarter to quarter. We're going to do another 500% in quarter four. We're going to do 1,000% in fiscal year 26. He could have said that. They were going to run the stock down anyways. Why? Because I keep telling y'all, Wall Street traders control this thing right now. I just walked you through where institutional investors are. Where are they at right now? Money market. They're in money market. These people ain't buying anything worthwhile. So they have left the candy store open and it's being run by Wall Street traders. I don't care what this guy would have said. They were running that stock price down because it benefits them. Didn't matter. They got the keys to the candy store. Institutional investors are on the sideline. They on vacation. They don't went to the Bahamas for a year. And they left the candy store to Wall Street traders. I don't care what this guy would have said. They running that stock price down. That's my opinion. You guys can differ on that. But in my opinion, they were going to run this thing down no matter what the CEO said or no matter what the results were. They were not going to be good enough. That's my opinion. Here we go. Fresh off an earnings conference call where his persuasion skills had failed to halt a 7% slide in the company's stock. On concern, the AI boom is fading. Now, help me out here, guys. How in the world can the AI boom be fading when 2 weeks earlier, 2 weeks earlier, you had three hyperscalers telling you they're going to keep spending money to build out their AI infrastructure. Google alone is going to spend $32 billion this year, slated to spend another $50 billion next year. So how could that be fading? See, it don't make sense, but this is what they do. This is what Wall Street traders do, right? This is what they do when they're in charge of the candy store. When they're in charge of the candy store, when they got the keys to the cash register, this is what they do. So here we go. The 7% slide in the company's stock on concern the AI boom is fading, and his latest chip won't sustain the industry dominance of its predecessors. He needed a moment. Boy, this is so crazy. The fact I was so clear, this is what the CEO of Nvidia said. The fact I was so clear, it wasn't clear enough kind of tripped me up, Hong said at the start of an interview with Bloomberg Television. After composing myself, he offered a robust defense of Nvidia's next generation chip architecture, Blackwell, and argued that what's to come is good enough for him and therefore should be good enough for global Wall Street. Come on, Jensen, you know what's going on, brother. Them people don't care anything about what no Blackwell gonna do. Them people care about money. And all they see right now is let's go against because we can make a lot of money. That's it. They don't care about that. And then you got your institutional investors. They in the Bahamas. They on vacay. They sitting in the money market at the tune of 6.4 trillion. They sitting in money markets right now just chilling. While you leave the candy store, the keys to the register to Wall Street traders. And all they want to do is strip you bare and leave you butt naked out there in the street with no clothes on. That's all the Wall Street traders want to do, right? So here we go. This was not a normal earnings report. Investors, technologists, AI spectators, and journalists were all counting down to what some billed as the most important set of numbers since U.S. banks reported amid the financial crisis. There were watch parties in bars. Boy, them true Wall Street traders set us up, boy. They set us up good. They set us up good. They set us up good. But you know something? I kind of knew this. Somebody on the Wealth Builders private mentorship club on Patreon, the day of earnings, they dropped a YouTube link where Bloomberg TV, I think it was Bloomberg, was it Bloomberg or one of the other national outlets, interviewed this guy. And I can't remember, he's a national guy, well-respected guy, but they interviewed this guy. This was probably, I looked at the clip probably around 1 o'clock or 2 o'clock Eastern time. And of course, earnings came out shortly after that. But in that interview, the guy said this. He was saying, we're going to see opposite of what everybody think we're going to see. He said, no, don't get me wrong. They're going to kill it. They're going to kill everything. He said this. Now, I'm paraphrasing, but he said they're going to kill everything. But you're going to see the opposite of a rally. You're going to probably see a sell-off. He said that. I can't remember who the guy was, but he's a credible guy. And I said to myself, he's probably right. That may happen. But did I go run and sell all my stocks and still? No. Because I know this is short-lived. See, traders won't control the stock market forever, guys. They're a part of it, and they control it right now. But they won't forever. Institutional investors will be back. Why? Because, see, at some point, they're going to have to start earning again. And that little 4 or 5% they get in the money market ain't going to do it. Not for their customers, not for their pension funds. They got a lot of pensions to pay out. And those pension funds got to make money. Double-digit money. So at some point, institutional investors will be coming back in and buying again. I don't know if they'll buy Nvidia. I don't know if they'll buy other semiconductors, but they're going to come back in at some point. So I'm going to wait. I'm going to continue to wait in dollar cost average in, and I'm going to buy the dip when appropriate and wait for this thing to work itself out. But yeah, I thought that was real interesting that guy at the 23rd hour, 22nd hour, he pointed that out and said, you know something, they're going to kill, but it's going to be opposite what most people think. And that guy was right. I got to give it to him, whoever he was. And within minutes of Wong joining Bloomberg Television from the Nvidia headquarters, there were Reddit threads from the meme stock crowd about how bullish a signal his sartorial choices were and what his sipping an undetectable black liquid, Coke or coffee, live on TV meant. Hong was a bit exacerbated. That's a big word. I'm glad I got that one right. Because he'd done his best on the call to explain the intricacies, got me on that one. Intricacies, the interest. Okay, y'all know what I mean. I can't get that word. That's a big one. I got the last big one, exacerbated, because he'd done his best on the call to explain the intricacies, whatever that is, of the most advanced technology known to humankind to a market that had set high expectations. Sky high. Why did they set sky high? When I think back on this was all designed, guys. Why in the world did they set sky high expectations? Why? Wall Street traders knew they couldn't live up to it. They had no intentions for these guys living up to these high, lofty expectations. Now, the good news is they beat expectations, but they didn't care. They didn't care. Oh, okay, you beat expectations, but guess what? We want you to do 31.7 billion in Q3. You're saying you're going to do 32.5 billion, but that ain't high enough over our goal for you. You got to be higher than that. So we're going to ding you on that. Also, we're going to ding you on the Blackwell because you didn't come out with it on time. So we're going to ding you for that. We're going to sell you off 7%, and then we're going to go even lower in after hours. Yeah, that's what they did too. Wall Street traders did that because there were no institutional investors there to back them. Institutional investors are in the Bahamas. Their money is in money markets. There was nobody to back them. And the retail folks, they had already fooled us. So we didn't have no money to buy more because we were already in. We're already in. We got in before earnings. So we had no money after earnings to fight the Wall Street traders. They had already suckered us in from Black Monday, right? They pulled off Black Monday and dipped that thing. And then guess what they did? They propagandized us. So we came in before earnings. So we had nothing left after earnings to combat those guys, and they knew it. They knew it. They also knew institutional investors was in the Bahamas. Their money is in money markets. They ain't coming back here until next year. So it was a perfect setup. I got to give Wall Street traders their credit because it was a perfect setup. I mean, it was perfectly timed. August 5th, they dropped in that stuff about China, not China, but Japan and the yen and whatever Japan's currency is. They dropped that little thing in on August, the morning of August 5th about what's going on in Japan. They just increased their interest rates. The yen's dropping, whatever it was, or increasing. They just set us up perfectly. They set us up perfectly. Let's just give them their credit. Over the past 2 years, Nvidia shot up to become the world's third most valuable company that had been enough, whatever that means. His main point, Nvidia's next generation of AI accelerator is going to be just fine. This is what the CEO is saying. The company will have lots and lots of Blackwell chips after production ramps up in the final 3 months of this year. Stopping short of a financial forecast, Wang added that Nvidia's performance is going to be great next year. For weeks, there had been reports that something was fundamentally wrong with the Blackwell design. Propaganda, of course. It's literally the biggest chip to enter mass production using 2 chip dies in a complicated design that also makes manufacturing more challenging. The issue was addressed in documents and on the conference call. It isn't the Blackwell graphics processing unit itself. It was the chip. It wasn't the Blackwell graphics processing unit itself. It's how the chip is made. Nvidia had to make a change to the design lithographic mask. Lithography, okay, another big one. Okay, I'm not going to pronounce that. Some type of technical mask. This is the template used to burn the lined patterns that make up circuits onto the materials deposited on a disk of silicon. Those circuits are what gives the chip the ability to crunch data. Right? While markets continued and Nvidia shares had their worst weekly drop in 6 weeks, the biggest investors remain sanguine about the company's AI story. Data centers will be built to power AI workloads, and Nvidia will be the main beneficiary. It's a dark place looking at the comments on YouTube, X, or Reddit, but retail investors and Nvidia fans were, on the whole, pleased with how the whole spectacle went. I was pleased with it too. I mean, like I said, man, no business performance issues. Yeah, you got market manipulation. Yeah, you got market behavior, but there was no business performance issues. That's all I can ask for from this company, right? That's all I can hang my hat on. The problem for Hung is we now have something else to target. He said, Blackwell will translate to several billion dollars of revenue in fiscal fourth quarter. So mark your calendars for a Wednesday in late November. Reserve some tables at your favorite watering hole, and prime your social media game because the mother of all earnings, again, is still to come. Wow, I like that. I like that. I like that. So there's your little update on the 900-pound gorilla. The CEO is extremely optimistic. Me as a little old baby investor with 11,200 shares of this company, I'm extremely impressed with him. I'm extremely impressed with his company. I'm gonna stay in this company as long as there is no business performance issues. I will stay in the stock and be patient like I've done for 30 years. I'm gonna continue buying SPLG. As I've mentioned, they're up. I'm gonna keep buying FTEC. As I mentioned, they're up. I'm gonna keep buying the MAG 7 or AKA MAG 6, but I'm also gonna throw in Tesla DCA. No lump sum stuff in Tesla right now until they get down to $150 a share, which they will at some point, right? When they do, I'll lump sum in, but until then, it'll be a DCA into the MAG 7 like clockwork every month without fail for the next 10 years. Because I believe once AI gets to a point where your hyperscalers can report income based on CapEx spend, that's when this thing goes to the moon. We need the hyperscalers to start coming out with revenue generated from CapEx on building out AI infrastructures. And I think over the next several years, we'll get that. And until then, I'm gonna keep buying the stock through DCA. I've already bought my lump sum, 11,200 shares, so I'm not going any lump sum stuff anymore unless Wall Street traders run that thing down to $100 a share or less. Then I'll pick up another 8,800 shares to round out 20,000 shares like my good friend, Nancy Pelosi. She's not really a good friend, but I like to think of her as a good friend. She don't know me. But Nancy, if you're listening, if you're a fan, if you're a YouTube fan, if you follow me, give me a thumbs up. And Nancy, do me a big favor. Go follow me on Instagram. It's down in the description box. Nancy, give me a follow on Instagram and blow me up. Because if Nancy follow me, I'm blowing up. I'm just letting y'all know that. I'm gonna be different. I'm gonna be a different guy. If Nancy follows me on Instagram, I'm telling y'all right now, I'm coming in here with a kilo chain on, with a big old medallion, a big old Nvidia medallion on it. I'm telling you, I'm gonna change. I'm telling you right now, if Nancy follow me on Instagram, I'm changing. I'm changing. I'm changing. I'm coming in here with the kilo chain on, with the Rolex on, anything you can think of. I'm changing. If Nancy follow me. So Nancy, get down that description box, Nancy, and give your boy a follow on Instagram. Please. Come on, Nancy. Help me out. Blow me up. All right, guys, I appreciate y'all for hanging in there with your boy for the day. It's been good. We covered a lot of topics. Kind of getting back to the old days where, I'm trying to get myself back to the old days where I can do a multitude of topics and not just zero in on the 900-pound gorilla, because it's going to be a minute. It's going to be a minute. I can't be on the 900-pound gorilla every day, because it's going to be a minute before that thing go anywhere. It's going to be a minute. So I can pull back on that a little bit, and let's address some other things in the economy, because the 900-pound gorilla ain't going nowhere no time soon as long as Wall Street traders are controlling it and institutional investors are sitting on the sideline. So for now, all I can do is be patient, watch for dip season, and if dip season happen, go get me a little bit. And if not, just watch it and just leave it alone, because it's right now, it's gonna fluctuate from 120 to 118. It might dip down, it might dip up, but until institutionals get back in it, it's not going anywhere, guys. So right now, I'm just gonna continue to look for other opportunities in the market, other than my 50, 30, 20. I'm gonna just be looking for other little opportunities, and as I come across them, if they're considered shorts, I'll share them with you guys. Of course, not a financial advisor, not trying to tell you what to do. But if I find stuff that makes sense for me and I think it's a good short where I can create some FCF, my job on this YouTube channel is to share that with you guys. And you can go do your own research and do a deep dive into the thing and see if it makes sense for you, right? That's what I like to do on my channel, is to find opportunities that make sense for me, and I like to share them with you, and you go do your own research and figure out if it makes sense. If it don't make sense, throw it out the window and keep moving. That's what I do. So thank y'all, man. I appreciate y'all. Get down in the description box, click on the Moomoo link, open up the Moomoo account today, get you up to 15 free stocks, right? When you try out the brokerage account, they're going to give you up to 15 free stocks, depending upon how much money you put in. You put $100 in, they're going to give you 5 free stocks. You put $1,000 in, they're going to give you 15 free stocks for just trying out their brokerage app. First link down in the description box. Position yourself. Position yourself for the long haul, right? Position yourself. Get down in the description box and click on that Moomoo link. Now, do me a big favor. Send me an email through the website. If you have problems with the Moomoo, you don't know how to use it, and you want to learn how to use it, I'll send you 2 tutorial videos that the good folks at Moomoo put together for you. It'll be great, right? It'll walk you right through it. So all you got to do, get down there and hit that little link that says Moomoo. Hit it, sign up, get you up to 15 free stocks, and get yourself started today. Also, man, get over to the website, second link down in the description box, www.richardfain.net. Check out the digital products. Like I said earlier, hey, make an investment in yourself. Number 1 tool to build wealth is your income. Number 2 tool to build wealth is what you do with that income, right? Those products in my website, they'll help you learn how to make income and what to do with it. Those are the 2 things that get you to wealth, guys: income and what you do with the income. My website has 10 digital products that will help you with both of those things. So if you want to have more confidence, and I believe confidence turns into execution, get to the website and check out the digital products and make an investment in yourself. Also, do me a big favor, consider joining the fastest growing financial group on Patreon. It's called the Wealth Builders. We got over 1,000+ people in 4.5 months in the Wealth Builders. Hey man, we're having a good time over there. Real robust community chat. Matter of fact, tonight, 8 p.m. Eastern time, we're having another Q&A. Yours truly, Q&A, right? And we normally have 300-400 people in there. We don't have all 1,000 people in there. People got lives, they on different coasts and different countries. Everybody can't be there at 8 p.m. Eastern time. But the good news is, once it's over, they have an opportunity to go look at the thing. And guess what? We have way more than 1,000 people that look at it when it's over. So we have 3,000 or 4,000 people that go take a look at it when it's over. So we're in good shape. Good Q&A. We don't do Q&As no more on YouTube. So you won't be able to ask me no questions on YouTube. You're not going to be able to email me and ask me no questions, because I don't do any questions coaching-wise or mentoring outside of the mentorship club. So the only way you get mentored by me is you got to join the mentorship club, and then you can send me direct messages, just you and I'll see, and we can talk about your situation. I can lend my 30 years of experience to help you. Outside of that, you're on your own. You got the YouTube videos, and figure it out yourself if you don't want to join the mentorship club, and that's okay too. You can figure it out on your own. Some people can do that, and that's great. But for those of y'all that can't do that and you need a little extra, you need some extra, you got 1,000+ people on the Wealth Builders that can be your extra, and then you got me. So you got the 1,000+ that can also give feedback, can give you encouragement, because more than likely anything you're investing in, if it's traditional, and if it's buy and hold, if it's big boy blue chip and long term, somebody in that chat is doing that too, and they can give you their feedback. None of us are experts over there. We're just regular people going in the same direction to help each other build wealth. If you want to be a part of that, get over to the Wealth Builders. Join today. Get to the website, click on it. There'll be a membership button and a join button. You can click on either one. It'll take you over to Patreon, and boom, you can sign up. Worst case scenario, if you can't find it in the website, send me an email through the website. Send me an email through the website and say, hey, Richard, I want to join the Wealth Builders, but I can't find this thing in the website. Please send me the link for Patreon. Boop, send it to you. You can do that too, if you want to. My recommendation, go through the website so you can take a look at the products that can help you do what? Make more money, and do what? Take that money and invest it and build wealth. You can look at those products to help you do that. and then just hit the join button or the private or the membership button. Worst case, just send me an email and I'll send you the link. Sounds good? Well, all right, man. Y'all enjoy the rest of your Labor Day. Have a good Labor Day. Don't burn up your barbecue. Don't burn up your hamburgers. Don't burn up your hot dogs. You know, pay attention to them. Don't have too many brewskis, right? Obviously, don't drink and drive. Be safe out there. Enjoy your family. Enjoy your friends, and just be thankful. Be thankful. That's the key, man. Be thankful. For all of you folks that celebrate Labor Day here in the United States or abroad, just be thankful. Thankful that you are alive and well and can fellowship with family and friends and break a little bread. Give some thanks. Again, that's just a tip from an old school dude that had been around for 56 years. Just give some thanks, because all of this comes from somewhere. I don't know where your somewhere is. My somewhere is God and Jesus Christ. Your somewhere could be somewhere else, but it comes from somewhere. You didn't just wake up one day and poof, you came from somewhere. So give thanks to wherever you came from. For me, I'm giving thanks to God and Jesus Christ. But you give thanks to whoever you give thanks to. But have a safe Labor Day. Have a safe Monday. I'll see you guys back tomorrow at 10:30 Eastern time. Market opens tomorrow. So y'all know we're going to be at it again. The market opens tomorrow. I can't wait. I'm ready. I'll be waiting on you guys tomorrow at 10:30 a.m. Eastern time. Hey guys, do me a big favor. Stay strong, stay long. My folks on the private mentorship club, they know what that means. They know what that means. Stay strong, stay long. Some of them say stay long, stay strong. I like the reverse. I like to say stay strong and stay long. A lot of people in the private mentorship club like stay long, stay strong. Either way, it means the same thing. If you're not in the know, get in the know. Get yourself over to the private mentorship club and you'll know what that means. Stay strong, stay long. Lock it in with a thumbs up before you get out of here. Thoughts become things. See it in your mind. See it in your hands. Oh, hold it in your hands. My own saying I'm messing up. All right, let's try that again. Let's try that. Let's reverse. Take two. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy. I'll catch you guys on the next one. Peace.